Hey, Think Realty viewer and listener, thanks so much for joining our podcast today. We're here in sunny Tampa, Florida. Every time we do an event, we also bring in our guest live. It's so much better to do live podcast interviews versus doing it all over Zoom. And I'm excited about our guest here. We'll get to in just a second. But this episode is brought to you by Ashcroft Capital. Ashcroft Capital is a multifamily investment firm. They target value-add Class B apartments in the Sunbelt market and partner with accredited investors. Visit ashcroftcapital.com/Travis. You can talk to Travis about investing in B-class apartments. You can go there to learn more. All right, today our distinguished, amazing guest.
Well, don't go too far.
is my friend Chris Ragland. And Chris, we've been good friends for a long time. And obviously you've meant a lot to this space. We've worked together a lot. We've had a lot of conversations. And then I've watched you, kind of more in an institutional, corporate role. And then I watched you kind of go off and build now your own empire, which is really exciting. And I just want to first say thank you, that I appreciate all that you meant to both the lending industry and the investment industry. You've been such a friend and confidant. I appreciate it.
Thank you. Thanks a lot. That means a lot coming from you.
Cool. Well, let's jump into the current marketplace. Obviously, on the mind of every real estate investor are interest rates and squeezed yield returns, fear and intrepidation. So many of the investors that are in the marketplace today did not experience, and it's always shocking to me that you feel like everybody has been through 08 to 2010 or even like early 2000s, like when I started investing. And the reality is most people haven't. Like, this is all new territory for them, and there's a lot of fear. And I'm curious not to know the stats that you know, but to hear the feeling you have about the current marketplace.
Yeah, totally. When did we become the old guys again?
We definitely have made it.
I think we're on that side now.
Yeah.
And you're right. You think everyone went through 2008. That's not true. And it's certainly not true that everyone went through the early 2000s, right? Where they had the significant, .com corrections that were going on in the markets. They haven't, And for me, a lot of my mentors were drilling into me like the savings and loan crisis of the 80s, So I think about these things when I'm looking at the marketplace. I wasn't surprised when, the Fed came out and said we're going to raise interest rates 3/4 of a point.
Sure.
I'm not going to crystal ball it right here, but I won't be surprised if they raise it a full point.
Right.
That's a possibility. That's on the table. And it's created kind of a lightning rod for discussion. Everyone's going, okay, inflation, we're talking about 9%. Are we going to creep over double-digit percentage points as we go into the end of the year?
Sure.
Possible. How do I hedge against that, right? I'm seeing more people right now, particularly not even high net worths, like they're borderline accredited, maybe just a below the line.
Sure.
They're more interested right now in where can I put my capital, and particularly in a real estate strategy to hedge against inflation.
Sure.
More now than I've seen in the 22 years I've been doing this. That's the biggest surprise for me, is that people are hearing a message that this inflation is real, my money is worth less tomorrow than it was today. How can you help me? Now's a great time to be raising money.
Yeah, there's a lot of people out there that are weighing today the fact that they need to keep more cash than maybe what they thought they needed to because the cost of living is more. However, if they keep too much cash, it's just eroding, right? And there's a lot of pundits and loudspeakers out there that are saying stuff like cash is trash and all that stuff, and that's been going on for a while. But the reality of it is we do face a massive inflation problem, and there's probably no true end in sight. Depending on maybe the political structure, like we may see some relief in gas, we may see some relief in fossil fuels, maybe. But in a capitalistic society, when you can get $4.50 or $5 out of a gallon of milk, it's probably not going to go back down to $2.50. Like that's the free market society we live in. And so, it just costs more. Let me give you a couple of stats. I want to hear your thoughts on them, and then we'll jump into what you do. There's still a current inventory crisis. There's demand currently on single-family rentals at about 6.5 million homes that buyers desire to buy even after the interest rates were risen or higher and raised. Can't say correct words. But then there's still 6.5 million home buyers that are desiring and feel entitled that they deserve a home, right? Like 1960s, the whole entire American consumerism changed, and now they deserve this asset. It's not I need it, it's I deserve it.
Yeah.
And I'm gonna buy whatever my monthly payment can afford, right? And so they deserve these assets. And interesting stat though, if we go up 0.75%, which is what we just, the interest rates just gained, we still, if we go up 0.75 again in the next couple weeks, we still are underneath of where we were during the Obama administration. Okay, from an interest rate perspective. Number two, we have 6.5 million homes that are still, demanded by these people that feel entitled that they need their house and it's theirs, they should have it. Number three, the average person is feeling the pinch of about $450 increased expenditure based on inflation. However, the average American is making $1,300 more per month than when they were in the Obama administration. These weird stats are like kind of hitting at all areas, right? And I'm curious to know just your thoughts on, because it seems like, Einstein said that a five variable problem you can't solve, and it feels like we're in a 5 variable problem. Like it's like this stat and this stat points to like, well, we should be growing, and this stat points to, well, man, the bottom's going to fall out. Mm-hmm. How do you gauge all of these statistical anomalies and go, but this seems to be true north?
That's a good question. Like, how do you derive a final kind of conclusion out of all of that? And you're talking about interest rates creeping up, inflationary issues, lack of inventory, wage growth, right? So that's the 5 variable equation. So it's okay, I get it. How do you really come up with an answer on that? I don't think anyone can truly come out and say this is what's going on. I do an exercise. I've actually never really talked about this before.
Wait, exclusive right now.
This is it, exclusive.
Never talked about this before in the history of mankind.
Right, no.
Just wait, get out your pencil.
At least in my history. I really make it a point to talk to groups of people that I don't normally socialize with.
Okay.
That could be politically, that could be interests, it's different things. When I'm trying to determine where are we as a people, I deliberately go out, break outside of my social norms, and communicate with people that think very differently than me.
Yeah.
I may disagree with them, or they may just think differently, and I don't even understand them.
Sure.
The point is, I want to go out and survey very, very different constituents or people that are involved in the marketplace. And from that, I derive, I think, through it's a gut reaction.
Sure.
Because I know I can't just use a math formula in the data and say, this is where we're headed. Nobody can. So what's better than that? It's trusting, evolution and my instinct.
Yeah.
I'm trusting my experience in canvassing a social groups and saying, okay, I think I have an idea of where this is going, and then I'll act on that. Now, of course, it's going to be guided by data.
Sure.
I'm not going to go invest in a marketplace where I know there's an oversupply of housing. That would just be stupid. Those kind of things. Or I'm not going to build a business where I need to sell paper on a volatile secondary marketplace overnight. That's also not very wise unless you're backed with your own capital.
Sure.
So that's actually how I do it. But one of the ways that I behave, it's a good segue into kind of what I do. I look at this and I'm like, there has been wage growth. There is an undersupply of inventory. I like to focus on residential marketplaces, right? I like single-family residential. I like multifamily residential. I like hospitality-focused residential. That could be everything from an Airbnb up to, for me, I like small hotels, right? So I like anywhere that you're going to lay your head at night and go to sleep, right?
It's kind of the fundamentals of need, right? Like food, water, shelter.
Exactly, it's Maslow's, right? So it's like, okay, what do we need? I need a place to live. I'm not going to give that up, or it'll be one of the last things I choose to give up if I have to give up something, right?
Sure.
People literally, I don't know how wise this was, but during the Great Recession, people were giving up their cars before their homes, right? Because it's a psychological reaction, even though maybe they needed their car to go to work, and they could have rented or moved in with roommates, but keep your car, right? That's actually not what happened, it was the other way. So kind of crazy when you think about the data, but yeah, that's why I focus in residential real estate. I'm just real passionate about that because we all need a place to live.
Yeah. You want to hear a funny stat real quick?
Totally
off topic.
Okay.
Do you know what the only consumer product that had a less rate of delinquency than mortgages or rent One consumer product.
There's one consumer product. I do not know.
Cell phone.
So.
Isn't that crazy?
It's not. Think about this. I mean, we're so chained to these things, right? It's like, you think they're going to let
the delinquency bill on their cell phones
oh my gosh.
during the last recession
was,
less than mortgages.
That's not an inflated stat because of the Obama phones, though, right?
It may have been, yeah.
I don't know.
Those little ones with the big giant buttons on them.
Right.
The Bumblebee phone.
Oh my gosh, that's great.
So you have moved into this space, and I know that it's been fun to watch you over the last few years kind of build your own empire. You always worked for others and help build their empires, but now Ragland, you've got your brokerage and you've got all these things. Tell me, what is it that you're focused on today? What's the big primary focus? You talked about residential, multi, single family, and how are you servicing these people out there that have, disposable capital for all intensive purposes that they need to put into?
Yeah, and right now the motivation that's coming from a place of fear and unknown is preservation of capital. They're not even concerned with growth, right? Income strategies, all that's out the door. Right now, the investor today that I'm talking to is, okay, how do I preserve my capital?
Sure.
Which is meaning growing along with inflation. That's preservation. The thing I'm focused on, and you'll have a lot of respect for this because of some of your other business affiliations, but we're really focused right now on building better processes, documentation, automation, the people. That's really the core. And you're right, we're fully integrated. So what does that look like for us? We're the brokerage, the development company, the management company, and even the property and casualty insurance. So it truly is a full circle for us. We're all in-house, right? I don't need to farm anything else out. And
But you don't go all the way back down to wealth, capital management. It's more of like, you basically will partner up with somebody then to use your vertically integrated sources to essentially deploy their capital.
Correct, and that's usually high net worth, ultra high net worth, and we work with family offices. So family offices behave a little differently. We're pretty good at working with those types of groups. Yeah. We're not a wealth manager. I'm not an RIA. Is that like your disclosure you do?
Yeah.
Like I'm not an attorney? So no, we are an alternative investment facilitator. That's really what we are. And real estate is one of our core products that we offer.
If you said by percentage, what do you think you allocate towards real estate versus all other asset class?
It changes over time, but right now I'd say it's like 75% real estate. A function of that is, of course, my level of comfort and experience in that place, in that space. Also, though, the groups of people that I have, interacted with for 2.5 decades know me as a real estate guy.
Sure.
So I naturally attract more people who tend to be interested in real estate.
And deal flow comes your way too because you've been in real estate, right?
All the time. You and I see deals all the time. Right. We're trading deals, showing each other. I'm like, this is a cool deal, but not in my space, that kind of thing. But yeah, I'd say 75% of the time it's in real estate.
Yeah. Not to get too off topic, I mean, obviously everybody on here is probably a real estate investor, but what other places are you looking at? What other, cool opportunities do you have?
So I got right now that I've fully vetted out that we enjoy working with. Also, that's a big part for me. It's like, I'm at the point now in my life, if I'm not having fun, I'm not doing it.
Right.
It's not going to work. So we have 3 other buckets that are fully vetted. And part of that vetting, by the way, is I have to be part of that team. So I might be the chief investment officer. I'll sit on the board. It's not a referral. I'm not just raising money for a third party and shoveling it over there. So there's 3 of them, right? So one of them is actually student loans for commercial airline pilots.
Sure.
Right?
Yeah.
So I do that with a guy that you and I both know very well. So we're actually raising capital for that. That business is really interesting.
The return rates on that look amazing.
They are amazing, and it's primarily because it's a relatively new industry.
Yeah.
Not the pilot, pilots going to school to get their pilot's license for commercial pilots.
Right.
That's old. What's new is no one's ever thought about creating a student loan product for that specific group of people. And turns out,
and it's a high ticket item too.
Well, guess who our number 1 competitor is for student loans?
American Express. I have no idea.
You nailed it. It's credit cards.
Okay.
Literally, that's what people have been doing. So this whole time, if you want to get your pilot's license to be a commercial pilot, you put on your credit card. So when that's what I'm up against, 24% or whatever,
Right.
it's like, yeah, we're going to make some
You can
good money.
compete, yeah.
So that's the first one. We're doing quite well with that. The second one, this one's not for everybody, obviously, but I'm also involved in a cannabis company in California.
Growth facility?
Only in California.
Okay. Growth facility? Or
No. So we are actually another vertically integrated company.
Okay.
And California does it kind of strangely, shocker. They have a license for everything.
Sure.
We have every single license, and we operate in every single space with the exception of grow.
Okay.
So we actually buy the flower, and then from there we do everything else.
Yeah.
We do the extraction,
All the way to distribution?
product manufacturing, wholesale and distribution, the whole 9 yards. So that's the second.
You also
one.
have retail as well under that?
We have the license for retail, which is what you're required to have effectively to do delivery.
Yeah.
So we wholesale it to stores.
Sure.
You can find our product in every store that has a legitimate license. We actually, we're very by the book. And then now we're rolling out delivery, delivery to your door.
Wow.
Yeah, there's a lot of regulatory. You can
DoorDash
imagine.
for pot, huh?
It pretty much, yeah. But I mean, there's like signatures and ID verification. It gets very complex very quickly.
Yeah, I was just messing with you.
And then the
That's
last one, which is a little bit more, even more exotic, I would say, from a financial standpoint. But I do some international private equity stuff.
Okay.
Got a couple of businesses in India that are kind of, call it as a product as a service or software as a service, different types of companies. So we have unique relationships with people that are from very wealthy families in India who get kind of first rights into these big investments, and we come alongside them and we invest with them. And
interesting.
That's been really
So it's
cool.
not microloans. These are like almost like VC overseas.
It's pre-IPO.
Okay.
They're usually, so we don't like pre-revenue.
Yeah.
That's too speculative when you can't put your hand around it. And we basically come in right before a company is proving themselves out to go to the public market.
Sure.
Yeah.
Do you structure all of these investments as funds or more of a one-off syndications, or how do you structure a lot of these deals?
Most of what I do, and it's because I have a background in private lending, I like to do through funds. Right? Yeah. So I would say the vast majority of what I do now is through a fund structure, and that could be a Reg D, a Reg A, like all kinds of different fund structures at this point.
Let's jump back into real estate. I'm sure that every real estate investor we have loves shiny objects, and they may all hit you up about every one of those.
Give me a call.
Which is great. But to jump back into real estate, since we're called Think Realty, but I think that I'm curious to know what your thoughts are for using real estate as kind of an anti-inflationary hedge. I think there's a deeper, more strategic reason to be in real estate today based on where inflation is. Do you have any insight on using it as an anti-inflationary hedge versus all the other asset classes that are out there?
Yeah, I would say the real estate part's unique there because depending on the structure of the deal, depending on the marketplace, depending on just your own desire, you can find deals that are perfectly tuned at anti-inflationary issues, right? So, for example, I see some marketplaces where the rent increases are basically pegging inflation, right? So when you're looking at the NOI of a multifamily unit that is increasing, literally pegging to inflation, that's a quote-unquote perfect hedge.
Sure.
A lot of them are beating that, right? So I live in a couple of places. Austin, Texas is my home.
Sure.
We're kind of beating inflation on the rent increases, right? It's embarrassing. We have a different set of problems. We have an affordability crisis.
Sure.
So there's people that are investing in Austin, not because they're trying to make money, they're trying to be good stewards of a community and create housing stock where we have this massive shortage. Naturally, there's a great place to be. You're not going to lose your pants or your shirt if you're investing in a place that's like that, right? So yes, you can, but it has to be in the right market and structured correctly, if that's what you want. I have other people that are like, all I want to do is maximize the cash flow. They're not even looking at inflation. Have people who are like, show me the IRR, that's all I care about. And then I have others that are purely preservation long term. They're like, look, I want to buy this. I don't need to make a lot of money, but I'm going to hold on to it for like 20 years. So I want to plow that capital back in, make capital improvements, take care of the property. This is going to be a trophy asset, right? So it really depends on what you want to do.
Right. Yeah, and I think that that's important is to have somebody like you that they can talk to determine that, right? Because we all get enamored by a deal. And by and large, most real estate investors, if you put them at the actual property, they can't say no because there's a physical asset in front of them they just get enamored with.
Starts to become emotional.
Yeah, I want this thing, you know? And I've stood in many hotels that are really bad investments, but because I'm at the hotel, I should definitely buy this, you know? And so, but I think that having those long-term conversations, because there's so many people that they don't understand the tax implication and tax consequence of growing your wealth. But you take a family office, they very much understand that, and it's about preservation. And so there's a reason why most real estate investors today are trying to get a 5 to 7 year exit on their multifamily, and most multifamily offices are like, we'll keep it for 40 years. You know,
correct.
like there's a very different
strategy.
Yeah.
And that's why everyone depends on what it is that you need. And that is basically one of the first conversations I have with anyone that ever calls me.
Yeah.
What are you trying to accomplish?
Sure.
And strangely, a lot of times I ask that question, they don't have an answer.
Yeah.
But that's okay. I can walk people through that conversation and figure it out, like, what is it you want to do? Now let me explain to you why this strategy is good or inappropriate for what it is that you're trying to accomplish.
Yeah. The other day I got into an argument with a New York Times writer.
Like you do.
Yeah. And I'm curious to know your take on it. I want to know if you're going to side with her or side with me, okay?
Okay, all right.
And by the way, we're going to tag the New York Times writer in this, okay?
Here we go. Well, see if there's an advantage here. Okay.
So she said, Warren Buffett came out and said he's putting $18 billion on the sideline. He's keeping, he's basically got dry powder. She said it shows his level of fear for the current marketplace. My rebuttal to that, and the argument came where I said you've missed the point of most investors, the way we think. We're not consumers, we're investors. Consumer confidence matters to the consumer. To the investor, we think about the exact opposite way. I said you've missed the point. I believe Warren Buffett, he doubled his wealth in 08-09 from 40 billion to 80 billion because he went on a massive buying spree. And I said, if Warren Buffett's ever putting capital away, it's because he's preparing for an opportunity. I believe that he believes that a great opportunity is coming. He's going to take that 18 and turn it into 30 or whatever it is. We had a long argument. You can find it on Twitter and then other places. But anyway, so the
dark rooms.
Dark rooms, okay. Yeah. But I'm curious. I mean, like, do you see that the same way? And if so, like, where do you think a Warren Buffett? It's one thing to have 10 million and try to create 20 million. When you have $1 billion, it's statistically impossible to create 2 billion, right? Like, I mean, like, it's near impossible, right? Like, you're a statistical anomaly if you can actually turn.
Where are the buckets to put $1 billion?
Right, and then all taxation is against you, the government's against you, every investor is against you, right? Like, if you have a billionaire, you're not getting the deals anymore, right? Like, they're taking of it. Like, statistically, it's almost impossible, right?
Yep.
So, your thoughts on that?
Well,
do you side with me first?
Yeah, I'm going to get that out of the way. I do side with you. I don't think he's putting money on the sidelines out of fear. I think it's opportunistic. I know you think this way too. However, I will disagree with, and I can be wrong. I can be wrong here, but I disagree with the market assumption.
Yeah.
I do not believe, even what we're going through right now, that there's going to be this massive, great opportunity to come scoop up in the next 24 months.
Sure.
I don't believe that personally. I think that we have entered a new era of monetary policy, and basically the government is not going to allow that to occur again.
Sure.
And they're going to do things that are unhealthy and bad for the long term to prevent the short-term collapse.
Yeah.
I really believe they're going to do that.
And you think that started with us printing capital?
100% right.
Yeah.
Yes, exactly.
Yeah. And when you see the government willing to get involved at that level, then there's really nothing else they wouldn't do.
I agree too. And I really think it goes back to 08, like the Troubled Asset Relief Program, TARP, and all that stuff.
Yeah.
Like, we just got too aggressive, and now it's just continuing. And now they can't politically allow it to occur.
Yeah.
They must save it every single time now. So that's where I think we're at.
They saw what happened in 08 when they basically gave all the money to banks. We still printed capital.
Yeah.
Large amounts of it. But we just gave it to 6 banks, right? Like, I mean, like, we're going to put it here, and GM gets a piece, and Ford gets a piece, and JP Morgan. Like,
that's it.
But the average consumer, it took them 2 years to even feel some of that. Right? This time they said, put it in the hands of the consumer, and let's see what happens. It's one of the, to me, it's one of the greatest scientific experiments that we've ever seen that may go massively wrong.
Yeah.
for every dollar we printed, it might actually cost us 2. You know what I'm saying? Like when we see like the results of this.
Yeah, I think, and I think it's going to bear out very poorly. So again, I don't think there's going to be a massive opportunity. So for me right now, there's always reason to have some dry powder.
Yeah.
But I don't know about stacking $18 billion worth of it.
Sure. I think that his play, I think we typically try to think through the lens of real estate, right? We think, oh, that's the opportunity that could potentially come, because essentially that's what we saw in 08, 09. All of a sudden we got a 1.2 million homes foreclosed on that flood the market, and all of a sudden find opportunity. To me, I think where if I have to speculate, which I probably shouldn't speculate on Warren Buffett, he's the he's the oracle, right? But if I were to, I think he looks more at the private equity space. It's where he always plays. And so I think he looks at distressed assets that he could plug capital into to reperform them.
100%.
Not necessarily real estate. You know, I mean, he bought Clayton Homes. He got into the kind of like manufactured homes and affordable housing space. He's done a lot of that. But Warren Buffett, by and large, doesn't have this massive portfolio of real estate holdings.
No, he doesn't.
He has Berkshire Hathaway, which sells all the real estate, but he doesn't necessarily. He's selling picks and shovels. He's not buying gold. He's not digging for gold. So I think it's an interesting thing, but I think that it shows maybe an indicator based on his previous history where some of the blood in the streets might end up.
Yeah, I think so too. But remember, Berkshire Hathaway, the real estate company, is just a lead gen for his insurance business.
Right. Yeah. Exactly. Yeah. Insurance is definitely and I should know that more than anything, be in the insurance space. But yeah, really good. Well, I appreciate all your takes on the market. If you had one last piece of advice for somebody who's new and saying, I have capital, what would be their first step? It's a pretty dangerous step. It's like you're not taking like a step that's like 6 inches. You're like taking like a 4-foot step here, hoping not to break your leg, right? Like, what would be your advice?
I mean, if you've accumulated a decent amount of capital and you're ready to do a deal, my biggest advice is to invest side by side. Yeah. Go work with some people. Come in late to the game. Don't bet heavy, hard up front by yourself. Don't do it. Just go learn. Get in here. Get some reps and learn with some people that have done a few things before. Like, that's the best way to do this.
I always say this. I think the outside marketplace believes that real estate investors are all sharks. I think when you get inside the real estate marketplace, you realize most of them have these like desires for legacy, and they're willing to give it all away. The information. It's like I've found myself in so many situations of new investment opportunities where I say, I'll put 50 grand in this, but can I ask you a bunch of questions? Can I find out how did you underwrite that deal? What were the buying criteria?
Right.
By and large, if you're willing to put a little capital and they're willing to give you all the information.
Yeah, definitely, absolutely. There is a big culture of mentorship and coaching and people just helping people. Yeah, absolutely.
How do they find you on social, website? How should they get in touch with you?
Probably the evergreen website for me would be chrisragland.com. I'll always be there. Yeah. Yeah, I'll have a great story for that sometime. Okay. About my domain name.
We'll have to get to that on the next
We'll get that the next time, but it's good.
Very cool. So chrisragland.com, are you on social?
I am. You can find me on Twitter at Chris Ragland also.
Okay. Yeah. And they can see Twitter, like all of your flights. You always tag like where you're at in the world.
Yeah, I try to do that. That's just me trying to get more status and free miles.
Got it. That makes sense. Yeah. Very cool. Thanks for joining us today. I really appreciate it. Appreciate all that you do.
Thanks, Eddie.
One last thank you to Ashcroft Capital, our sponsor. This episode is brought to you by Ashcroft Capital. Ashcroft Capital is a multifamily investment firm. They target value-add Class B apartments in the Sunbelt markets and partner with accredited investors. Visit ashcroftcapital.com/Travis to learn more. Thank you so much for being a part of the podcast today. Again, Think Realty was created to be your companion. Whether we're in up markets, down markets, you're going to need access to data and people that are actually doing deals. Not gurus, not people that sell you courses, but people that are actually out with their bootstraps pulled up and their sleeves rolled up, actually doing this work. And you can actually find out how they're doing it, watch them doing it, and partner with them. And that's what Think Realty is all about. If you haven't been in the conversation with us, get a hold of us on social. That's LinkedIn, Instagram, Facebook, or join us at thinkrealty.com. Pick up our latest magazine on the shelves of Barnes & Noble, and just be a part of the infrastructure and world that we're building so that we can better assist you in your investing journey. Have a great day.